our sixth session, we have Mr. Mahmoud for the IFRS 15 revenue recognition. And to tell you a brief about Mr. Ahmed, who is our coming back speaker, because we always want more from him. He's the Director of Finance at one of the leading private entities with public interest in Qatar. He's a professionally and globally certified chartered accountant with a wide experience in auditing, financial management, financial consulting, and assurance services. Ahmed has over 12 years of professional experience with the international financial consulting and auditing firms, mainly two of the big four firms, Ernst & Young and KPMG, and one of the top multinational firms, Baker Tilly International. Ahmed has a wide experience in teaching the international accounting, auditing, and financial certificates, such as the CPA, the CMA, the CIA, and International Financial Reporting Standards, the IFRS. Please welcome Mr. Ahmed Mahmoud to the stage.
Hello, everybody. Assalamu alaikum wa rahmatullahi wa barakatuh. How are you doing? Everything is okay? I know it has been a long day and accounting after lunch, so it will be a bit difficult, but we will try to make it easy and engaging for you. IFRS 15, it has been like many years back. FASB and IASB, US GAAP and IFRS, they had a successful project to came in the same place with identical rules and terms for revenue recognition. With revenue recognition, actually, we had how many standards before in the previous version of the IFRS? Who remembers? 2. What are those? IAS 11 and 18. Yes, IAS 11 was the construction contracts, and IAS 18 for the normal revenue recognitions. Okay, so they prepared, actually they succeeded to have one pool to bring everything in place. So it's really good. They overcome actually a lot of difficulties that we had before, we experienced before with IAS 11 and IFRS and IAS 18. Actually, do you know what is the main reason or rationale behind having just one standard? Why they have made such changes only to bother accountants? Anything else? Yeah. Actually, one of the main things is to improve the comparability of financial results or revenue recognition across all industries. So you have unified terms for all industries. They can present their revenues, or they can recognize the revenue with 5 steps that we will discuss right now. So first of all, we need to identify revenue. What is revenue? What is exactly revenue? And when we can recognize revenues, when we can say, okay, I got this money, this is revenue in my financial statement that increases my sales, increases the profits, improves the profitability. Salespeople will be happy for increasing their or reaching their targets. So what do you mean by revenues, and when we can recognize this revenue? Okay, we need some participation. Where is the CMA champions? Yes, sir. Please, we need a mic, extra mic here for the audience. Yes?
Like revenue is an inflow reflected in the income statement.
Yes.
And it's recognized when the good or the service is delivered around here.
Yeah.
When there's a reasonable assurance that the company will collect the cash.
Okay.
Risks and rewards are
Okay.
standard to the buyer.
Okay.
And yeah.
Okay, cool. So basically revenue is additional inflows or enhancement of the company's assets resulted from transactions between parties, sellers and buyers. Could it be in form only of what do you mean by enhancement of assets? Yes, we understand cash, we have to account for accounts receivable, then we need to collect those accounts receivable. So what do you mean by enhancement of assets? Can I get asset as a remuneration or compensation for the service that I'm providing you, and I can recognize it as revenue? Like I'll paint your house, you will give me a mobile phone or any other asset. Could it be a revenue for me? It establishes the concept of revenue. Could it be the case? Yes, correct. Yes. In which value we have to book those assets in our records, this is something else. But yes, revenue could be recognized even if we collect cash or enhancing our assets. One more thing is that, okay, if I'll paint your house and you will pay on my behalf certain debt, so it's basically de-recognition of liabilities. Could it be a revenue? Yes. So revenue basically is could be cash, enhancement of asset, or de-recognition of liabilities. You will pay liabilities on my behalf. The main issue with actually revenue recognition is how much we need to recognize in our financial statements, and when we can recognize this revenue. Yes, let's say we collected $1 million today to do any kind of services. Could it be a revenue immediately? No, you have to deliver the performance or obligation, or you have to do the service, you have to do something. This is why, to earn this money, otherwise this money will be as what in your financial statements? Will be unearned. It will be unearned. Where we can see the unearned revenues in our financial statements? Liabilities section. Okay, so we have to meet certain conditions in order to be able to recognize those revenues in our financial statements. Okay, so let's go in with the 5 steps. Yes, IFRS 15, it was compulsory since 1st of January 2018. So you have to prepare your financial statements in accordance to the IFRS 15. We have the 5 steps. Who knows the 5 steps to recognize the revenue? Yes, we will see them together, but you just need to refresh your knowledge. I know you are experts now. It has been 2 years applying the IFRS 15, so we need to remember them. What are the 5 steps? Who can tell me? Yes. To make it simple for you, we have 3 identifications, 3 identify, 1 allocate, and 1 recognize. 3 identifications, 1 allocate, and 1 recognize. Okay, what are those identifications? Number 1. Yes. Identify the contract. Perfect. What else? What else? Identify the transaction price. Okay. What is the 3rd one? Identify what? The performance obligation. Identify the performance obligation. So identification of the contract, identification of the performance obligations to take them in order, and the 3rd one, determination or identification of the price. Okay, then what we need to do next, after identification of all of that? We need to allocate. Yes, we ended with the price. We need to allocate this price, which is step number 3, to step number 2. What was the step number 2, Amelia? Identification of performance obligation. Okay, so we need to split this price to the performance obligations. Can we have just 1 performance obligation or multiple performance obligations? Yes. We can have just one if you deliver the goods to the buyer. So this is just one. But if you are performing a service, and this service, it takes time, so this will be, along with the delivery, will be multiple performance obligations. The fifth step is what? What was the fourth one? Still sleepy? Allocate the price to performance obligations. Then 5, recognize your revenues in your financial statements. With revenue recognition, you can just book the revenue at a point of time, today, tomorrow, 1 week later. It depends on the delivery. If you have like single performance obligation, okay, I sold you a washing machine, I will deliver this washing machine to you, so done. Everything is fine. So this is a recognition at a point of time. Okay, so let's assume that you have this washing machine with 1 year warranty. 1 year warranty. Can I deliver this or satisfy this performance obligation today? 1 year warranty, okay, 1st of January, take the washing machine, take the warranty. Can I give the warranty one time? Could it be? Yes or no? The warranty. What do you mean by warranty? Expected repairs in the future. Over 1 year, I have to do some services. I will receive this washing machine. There was like some defects. I have to repair it for you. So over 1 year period, so the condition now, I have to satisfy this performance obligation over 12 months. So the delivery of the washing machine, yes, could be recognized as revenue today. But how about the warranty? The obligation will be satisfied over certain period of time. Okay? So this is number 5. You need to recognize your revenue when or over certain period of time, and we have some example. We will have some. Yes. Can we? Do we have mic, guys? Can you help us? Yes.
For the warranties, don't we recognize a provision under IAS 37?
Yes. Provision, this is the expected losses that I will have. This is, it relates more to the cost. But how about the money that I've received against this service that I didn't deliver yet? So, okay. So, yes, provision is perfect, but this is from the cost point of view. Okay? So, those are the 5 steps, guys. Identify the contract, identify the performance obligation, determine the contract price, and allocate the price, then finally recognize your revenues. Okay. What do you mean by identification? Identification of the contract. Do we have certain rules with which we can say, okay, revenue, we have a contract. How can we have a contract? How contract could be established between parties? Yes, so we have, first of all, we have 2 or more parties. Okay, they come together, they have binding rules, binding terms. They agree on certain conditions, certain rules, okay? So I can say this is a contract. But this could be verbally negotiated or just written. Yes, please, thank you. Could be verbally negotiated.
It should be binding by writing.
Binding and writing, yes. What else? Both of them. Actually, whether the contract is binding or not, it depends on the commercial law of your country. Like in US, just the verbal negotiations, when we agree over phone that you will deliver this quantity to me after 1 week with this price, then fine. The commercial law approves this transaction as a binding contract between the 2 parties. But let's say, like here in Qatar, we have to have them documented, maybe accredited, authenticated, whatever. Okay? So this is something that relates to the commercial law of each country. Okay. Identify the performance obligation. As we said, we have single and multiple. determination of the price. Actually, with the price, it is not usually to have the price straightforward. Like, okay, this is the total value of this item, or this is the sales price as per our price list of the company. So I'll just sell it to you this way. No, we have some concepts called contingent considerations or variable considerations. What do you mean by variable considerations or contingent considerations? The price, it depends on something else. Can somebody give me an example of a price where I don't know how much is the total value? The total value will be, okay, this amount of money plus certain other things I have to consider.
If you
Yes.
deliver within a particular time, you will pay for a certain amount. For example, if you bring it by air freight, I'll pay you this much. If you bring it by sea, if it takes more time, then I will pay you differently.
Okay. Well, it depends on
The time.
the time,
Yeah.
time of delivery. Okay. Yes. What else?
It depends on the discounts. For example, many retailers, supermarkets gives.
Yes.
Airlines give discounts.
Exactly. Certain discounts, rebates. Also, if you in the construction business, they can tell you, okay, if you finish this project within, it should take 8 months. If you finish this project within 6 months, okay, you will have additional incentives because you have done everything in a very good time, so it will be some incentives. So I have to account for all of those things in my calculation of the exact price that will be allocated to what? To the performance obligation. And we have an example for this. Okay. Then 5, recognize the revenue at a point of time or over time. Without going into details, let's skip to a question where we need to help this accountant of a company called TrueTech. And we need to help him in this dilemma. He wants to recognize his revenue, but he doesn't know exactly when this revenue should be recognized. Okay, so let's go to the example. Comp Stores ordered 1,000 Tri-Box systems on December 20th, 2017, at a price of $250 per unit. Assume that Comp Stores and TrueTech, who's the seller and who is the buyer? TrueTech is the seller, okay? TrueTech can cancel the order without penalty prior to delivery. Okay, at any point of time before the delivery, I can cancel this order and no obligations will be there. Okay, TrueTech made a delivery on January 1st, 2018 and received $250,000 on January 25th, 2018. Okay, when does TrueTech arrangement with computer stores or comp stores qualify as a contract for purposes of revenue recognition? When you can recognize that you have a valid binding contract between the two parties. How many dates do we have? We have December 20th, 2017, and we have January 1st, 2018. We have January 25th, 2018. Okay, what do you think? January 25th. Okay, who else? January 1st. Okay.
Maybe not 20 December.
December 20th. Okay, we have all options. Okay, that's really good. Okay. Yes.
It's all started from the shipping terms. What is agreed?
Started from the shipping terms. Okay.
Bill of lading date and it has been done prior to that.
Yes.
He has received the physical delivery later.
Yes. See what it says here. Okay. If before the delivery date, I can do what? Yes. The buyer can cancel the contract. No more, nothing will be, I should pay nothing, no obligations to me if I cancel before the delivery date. So at this moment, we said we have to have a performance obligation. Okay, if you are able to cancel the performance obligation, now we have a valid contract. You can cancel at any time. So when exactly the units will be, or the agreement will be binding between the two parties, and I can sue you. I can go to the court saying that, guys, okay, I've done something and I'm waiting for money, he canceled, and I need my money back. So it's on delivery date, okay? On the delivery date. Why? Because let's twist the question a little bit. Okay, let's say there is no such a condition of cancellation of the delivery or the contract before the delivery date. We just exclude this part. Where is it? It doesn't work. So we will just ignore no penalty, no cancellation. We will just delete the cancellation clause. Okay, at this moment, when this contract will be a binding contract? On delivery. Okay, good point. What else? Who else? Yes, 28th of December. Why 28th of December? Yes, because there is no cancellation clause. We made the agreement, we made the deal, that's fine. I'll give you whatever you have requested, and you should pay my money back. Okay? So the yeah.
First of January, because the seller got an obligation to deliver it. So the obligation is there only on the delivery of it.
When do you have, here we are saying that when we can have a binding contract between the two parties, because as we will see later on that you could establish something, create something from the scratch that is not sellable to anybody else. Like I've done a product with a brand. Let's see those roll-ups for IMA conference. Okay, do you see those beautiful roll-ups? So what will happen if IMA, they said, okay, before the delivery, guys, we don't need them. Can the printing shop sell this item to any other parties? No. Who are the other parties other than the IMA can use this? Okay, so that's why even the commercial laws, they try to protect the rights between the engaging parties. Okay? So January 1st, 2018. Number 2, identify the performance obligation, and with identification of performance obligation, we have, according to IFRS 15, 2 conditions. What are those 2 conditions? We have what we call distinct obligation. What do you mean by distinct obligation? This is something unique. Yeah, I can see this. Okay, let's take our example, our simple example of your washing machine with extended warranty for 1 year. How many performance obligations we have? In this example, if you buy a washing machine with 1 year warranty, how many performance obligations that the seller, they have to deliver or satisfy or fulfill, whatever? Yes, 2. What are those 2? Delivery, number 1. And what else? The warranty, the extended warranty. So I have 2 distinct services or 2 distinct actions. What are those actions? Delivery by itself and the warranty. Okay, can I buy warranty separately? Could it be sold separately? Yes, just go to Carrefour and tell them, please, I want 1 extra year. 1 extra year for the extended warranty. Yes, they will give it to you, but not for free. You have to pay some money, right? Okay, so the 2 conditions that you should be capable of being distinct and separately identifiable from other goods or services, i.e., you can sell them separately with a distinct amount of money, or I can exchange them against any other things. Okay, so a new example, and actually you need to identify the performance obligations. And in the meantime, we need to see how much of revenues we can recognize. Okay? So take like 15 seconds to go through the question, and we can explain it together. TrueTech Industries manufactures TriBox systems, a multiplayer gaming system allowing players to compete with each other over the internet. Okay, like the PlayStations. The TriBox system includes the physical TriBox module, which is the hardware, as well as 1 year subscription to the TriNet multi-user platform of the internet-based games and other applications. Okay, so how many performance obligations do we have in this example? 2. What are those? The first one to deliver the hardware, the modules, and the other one? Okay, 1 year subscription. TrueTech sells individual 1 year subscription to the TriNet platform for $60. Okay, you can buy the subscription if you have the hardware. You can buy the subscription for how much? $60 per year. TrueTech sells individual TriBox modules, which is the hardware, for how much? $240. As a package deal, TrueTech sells the TriBox system module plus the subscription, both of them, for how much? $250. So what they said, okay, with Compass Tours or the buyer, I told them I will sell both of them to you for how much? $250. Although I sell them individually for $60 and $240. Okay? So let's take it this way. Let's apply our 5 steps. First of all, do we have a contract here? Do we have a binding contract? Yes, there is an agreement between the 2 parties. One party will sell some products and deliver some services, and the other party will receive. Okay, do we have a performance obligation? Yes. Okay, so let's take them one by one. We have a contract, performance obligation. What are the performance obligations? To deliver the TriBox and the service itself. Okay. The third step is what? To determine the transaction price. The price that you will pay to get this service plus the hardware itself. How much you're going to pay? $250. Okay. What is the next step? Allocate. Allocate what? The transaction price, which is very important, guys. This is the tricky point. This is the trap that most of the accountants, they have an issue. Even before the treatment for IAS 18, the treatment was different. You can recognize everything one time. But now you have to allocate the transaction price to the performance obligations. So how many performance obligations? You said 2. Okay, how much is the transaction price? $250. How can we allocate the $250 to the $250 to the performance obligations? Yalla, it's you to try to think. Just give me how much you will recognize. How much you will recognize today and tomorrow. And with how much? Actually, you have 2 kinds of things here. You have 2 performance obligations. One of them, the delivery, okay. Does the delivery happen? Okay, yes or no? The other one, how much will be the hardware itself? How much will be the subscription for the 1 year? Yes. I need to hear some figures, please, just to try to work it out.
200,000 for the delivery.
Okay, some people, they are saying 200,000. Okay, based on what? We don't know. We need to have some basis, some grounds for our calculations. Otherwise, your auditors will squeeze you. Okay, so I hear a lot of 200s. But how did you get the 200? Who can tell me?
The individual price is the total.
I'm not so sure 200 is the correct answer, but let's see. Yes.
You have several transaction plans, 140, 160.
Yeah, yes. Yeah. So now he is saying that, okay, the total fair value of the 2 obligations, yes, 240 plus 60, so it's 300. Okay, but I will pay only 250.
So 240, 50%.
Okay.
250 to the amount of the first transaction, of the first application, which is delivering the service.
Okay, perfect, which is correct. So he tried to find a reasonable basis of allocating the price or to the performance obligations.